Good evening, everybody. I'm Jerry D'Ambrosio, Manager of Educational Content here at VectorVest. My pleasure to bring to you this week's special presentation, From Data to Decisions, Unleashing the Near Perfect Indicator. So have you ever stared at a stock chart and thought, okay, is this the bottom or is it just pausing before it crashes again? Or, ready for this one, you've gotten in only to watch the stock do absolutely nothing until after you sold it. Then it takes off like a rocket. I've been there a few times recently. It's very frustrating. Most of us don't struggle with stock selection. We know what a strong company looks like. The real challenge is timing, knowing exactly when to pull the trigger, and even more importantly, when to stay out. That's where the Near Perfect Indicator, or NPI, comes in. It's not just another line on your chart. It's a systematic way to spot high probability entries, avoid head fakes, and actually hold on to your winners longer with confidence. Today we're going to break it down step by step, how it works, what to look for, and how to use it in real trades so you can stop second guessing and start trading with a serious edge. Let's dive in. Here's the idea in a nutshell. The NPI is designed to help you buy great stocks at the right time, typically right at or near the bottom of a price cycle. You're not just buying dips, you're entering when momentum starts turning in your favor. That's the key word there, is momentum. That's the difference. This helps you avoid second guessing and gets you into trades with much higher probability of success. Let's talk about the first part of the NPI, and it's a big one. It's called RT, which stands for relative timing. Think of it as your price momentum radar. It looks at how fast the stock is moving, what direction it's going in, and whether it's picking up steam. The NPI then smooths that out using two moving averages, a 5-day moving average and a 40-day moving average. So when the faster line, the 5-day, crosses up through the slower line, the 40-day, that's your heads up. That's something good may be starting. And this is how you read those waves. 40-day moving average on RT acts like a wave tracker, showing you the overall rhythm of price. When the shorter 5-day moving average surges up across the 40, you're looking at a potential breakout in motion. Not guesswork, not hope, just data-based conviction. And we're looking to enter at the end of these major price cycles. And you can see the 40-day moving average, how it slopes downward for a considerable amount of time and then eventually bottoms out. And that area there, you're likely going to see a short-term moving average on RT crossing above the 40. We'll take a look at some examples in a moment, but that's the entry at the end of these price cycles. That's ideal. And I'm going to show you a nuanced, enhancement of the NPI that I demonstrated in at the Vegas 2-day seminar using RT itself. All right, we'll get to that in a second. So just take Walmart. Using the NPI, we can isolate entry points that align with both price cycle lows and rising momentum. We're not just buying the dips here. You're buying when the momentum confirms that the dip is over. We'll look at Apple as well. We'll take a look at some examples in the program. But over this 2-year period here, every time that the NPI signal lined up, the RT crossover happened at a low price. Those were your best entry points. Not too late, not too early, just right. It's like having a momentum detector that says, yep, now is the time. Now, we're going to talk a little bit about how you don't want to take these crossovers here. So we're looking at the lower end of the price cycle, ideally when the 40-day moving average on RT is below 1, and you get the short-term moving average crossing above the 40. We're at the upper end of the price cycle here, for example, but you're still going to have your short-term moving average crossovers from time to time. Those aren't the best signals to take. I know in this case, stock continued to go up, but momentum sure was breaking down at least during that time period. To give ourselves the highest probability of successful trades, we want to try to buy as low as possible. So here was another opportunity. Here might not have been a signal that you took because you're at the upper end of the price cycle that's just beginning to roll over. It's a very important part of this whole technique. The second part of the NPI, we went over the RT component, is our stop price. And no, it's not just a regular stop loss. This is VectorVest's calculated stop based on fundamentals and technicals, kind of like dynamic support. And again, just like with the RT, we use a 5-day and a 40-day moving average of the stop price. When the 5 crosses above the 40 and keeps rising, that tells you the stock is gaining strength and likely has room to run. One of our top community members, VectorVest subscribers, Francis N., figured something out. The stop crossovers don't just help you enter. So, take Costco, for example. Back here, November 2023, you got a bullish crossover here, right? You're at the lower end of this price cycle. RT is very close to, or the 40-day moving average on RT is very close to 1. You get a strong crossover here. You get price conviction. There's your entry. You also had the 5-day moving average on the stop crossing above or residing above the 40-day moving average on the stop. That's confirmation that your short-term momentum change has some legs to it because it's supported by a few other moving averages. Remember, these moving averages are on our stop price. Our stop price is already a moving average, so it's double, triple smoothing, however you want to call it. So what these moving averages at the top do is it allows us to stay in positions longer as opposed to reacting to the 5-day moving average on RT crossing below the 40. That is an opportunity for anyone who is in this trade to take profits. If you want to take profits, you let the rest run. You can use the 5 and the 40 on the stop to keep you into the remainder of the position. And as you can see, got close to crossing here but never did, got close to crossing here and never did, got close to crossing here and never did. I'll explain as well in a little bit how you can continue to add to a position. If you bought it back here and maybe sold half of it here and let the rest run, you kept this thing for quite a while, right? Because the 5-day moving average on the stop never crossed below the 40. But you got a situation here where you had another buying opportunity, so you could have added to your position there. You're legging in and legging out based on NPI signals. You can also leg in and leg out based on market timing signals and other factors. Let's operate now with the NPI and talk about those different strategies. The market timing strategy. You enter and exit in phases aligned with market timing signals. So if you're taking a primary wave up, the first one in a while, maybe after the buy to sell ratio had gotten below 0.2, MTI had gotten below 0.6, you're taking the first trend change signal, the primary wave up. You open with a smaller position or a reduced position size. And then if you got a green light in the price column of the color guard, you're adding to that position and so on as market timing signals change. Then there's the target-based strategy where you add shares at price bounces off of support and then scale out at resistance. I'm in a trade right now in our swing trading coaching group that I'm going to show you that kind of meets that second criteria there. I'll explain. Equal increment strategy, which is today's focus. Divide your capital and trade each portion based on the technical NPI signals. So you're taking a starter position when the 5-day moving average on RT crosses above the 40-day moving average on RT. You're legging in and buying more shares when the 5-day moving average on the stop crosses above the 40-day moving average on the stop, and then managing the position based on those signals. You're taking profits when the 5-day on RT crosses below the 40. You're letting the rest run as long as the 5-day moving average on the stop stays above the 40. Man, that's a lot. I understand, but it is very systematic. Once you kind of get it in your head, it'll be second nature. So there are some rules here. Very, very effective techniques. Let's take a look at that one position I'm in. It's called DRS. That's the symbol, Leonardo DRS. We have the layout on the chart, right? So this is your NPI layout, the 5-day moving average on RT, the 40-day moving average on RT, the 5-day moving average on the stop, the 40-day moving average on the stop. I have two lines drawn on here because the hard right edge is September 23rd. I took the trade the day after. As you can see, we got ourselves a signal, right? So the 5-day moving average on the RT crossed above the 40 at a relatively low price cycle, right? The 40-day moving average on RT is below 1. As you can see in the lines that I drew here are channel lines. You can clearly see that from this point here at the end of July all the way to the end of September, the price of DRS had been trading in a very narrow range. This indicated and detected that momentum was starting to pick up to the upside. I know it's hard to see when you're just looking at price, but that's the edge that you guys have with these indicators because they're data driven and they produce some really solid signals. So you get your bullish crossover here. I didn't take the trade. I took it the following day on confirmation. And you actually got a little bit of a breakout there. A little bit of a breakout there on the day that the crossover occurred. So I looked to take the trade the next day on follow through. I know it's hard to see, but we did get follow through intraday. Price went to 43.73, did sell off and close near the low of the session. I'm still in the trade currently. It's a small winner, but I added to this position. So I took the initial trade here on the 5-day moving average crossing above the 40. Then I added to the position here when the 5-day moving average on the stop crossed above the 40-day moving average on the stop. This is now a support level, isn't it? So price broke above this zone here, and it caused this zone now to become support. If price comes back down and retests support and successfully holds and retraces, that is an opportunity for me to add to this position. If I wanted to, if you choose to do that. If you already have a full position, then not. But we did talk about target-based, a target-based strategy and how to manage an NPI trade using support and resistance zones. So breakout above resistance, you buy it. If it comes back down to retest support and holds and retraces, you buy more. If it reaches resistance and you're profitable and retraces from resistance, you can close half the position and do it that way based on support and resistance zones. We do have a search in the Unisearch tool. Now this search is only available if you have our ProTrader module. ProTrader is our technical analysis searching tool. You could search for all these different types of moving averages, support and resistance, indicators, things like that. We have a folder in here called the NPI. Where is it? It's in alphabetical order, Near Perfect Indicator. And there are 3 searches in this folder. NPI crossing 1 day, which just simply looks at, on a day-over-day basis, the 5-day moving average on RT crossing above the 40. 3 days, the 5-day moving average on RT greater than the 40-day moving average on RT, but 3 days ago it wasn't. So you're getting your crossover within the last 3 days. And then this one here, the NPI Enhance, which is my favorite one of the 3 because it includes Comfort Index, CI. CI is a great indicator for anybody, investors, traders. It looks at a stock's ability to withstand long or lengthy downturns, resist those long or lengthy downturns. High CI stocks, it's on a 0 to 2 scale, above 1 good, below 1 bad. We like 1.25 here. It's a pretty solid number. Anything above 1.25, we're looking at a pretty solid 1-year price chart going from bottom left to upper right. I want to add something else here. We talked about how it's so important that you're catching these moves at the end of price cycles, right? You don't want to buy a 5-day moving average crossing above a 40-day moving average on RT, but that's happening with the 40-day moving average on RT, say at 1.5 or 1.6. You're at a higher, much higher elevated level. So I'm going to add one line to this. I did this in the Vegas seminar, and it was pretty well received. So I'm going to add one line to it. We're going to say RT is just simply less than 1. You can go lower if you'd like. I'm going to use 1. Anything below 1 I think is where we want to be. I'll run that as of just the close. By the way, the sort is RV times RS times CI. So here we are combining fundamental valuation with truly a technical indicator. CI, it only looks at price, looks at long-term price performance. But combining technical analysis and fundamental valuation, look guys, we only have 5. Only have 5 stocks here. Let's graph them and see if there's any candidates. Okay, so here's JFIN. We have our NPI layout on. Clearly you have a bullish signal here. Price had been falling. Of course price is going to be falling, right? When you have the RT at such a lower level, you got your bullish crossover here. We looked at a stock earlier and I said, I know you can't see the momentum change when you're just looking at price, but the indicator detected it. I think it was with DRS. You can't see that a momentum change is underway here, right? You can't see it with the naked eye. The indicator is telling us that it is. Here's what I would do. Wouldn't buy it just today for any old reason. Let's break above these recent highs, and I think you're moving in the right direction if that happens. So pretty good candidate. 5-day moving average on the stop, well below the 40. So if you take a starter position here, a smaller position, once these little mini resistance prices are broken right to the upside, and then if you're right and the stock keeps moving, the 5-day moving average on the stop crosses above the 40-day moving average on the stop, you can add to that position. Let's look at the next one. CANG. Just don't love price here. I mean, if you had to be selective, I would not choose this one. You have at least a former uptrend, right? So a much better looking chart over on the left-hand side. Could be a nice little turnaround candidate here. I don't love price there. Not a lot of data here. Tough to really gauge. I think this one's fantastic. This one's a pretty good one. If we look back to the last time that you got a bullish crossover, well, you had one here, and you know what? Probably could have taken it there. Only went up for one day after, and then it completely crashed. You don't know that's going to happen. Worst case, you closed out there. Okay, and then you got a fresh crossover here, and boy, was that a winner. AKBA. There's your bullish crossover. You take a starter position. You can then add more to it when the 5 crosses above the 40. That told us that momentum truly was picking up. You didn't get, look at this, a bearish 5 RT crossing below the 40 until here, about a week off of the actual high. Pretty good trade there. Getting another setup here. This one, just like the first one, I'd wait for these little high prices to be taken out before I would take that one. But you got a nice crossover there at the bottom at the lower end of a price cycle. Looks like we only got one more. I like the other two better. AKBA, and then the first one we looked at was a pretty good one as well. Again, you do need ProTrader for this scan because it uses moving averages of indicators, as well as price in the scan itself. And there will be a link in the VectorVest Views tonight to take out a trial to the ProTrader module. All right, folks, hope you enjoyed today's special presentation. Remember, there will be a link in the views to try ProTrader out for a couple of weeks so you can take a look at that MPI scan. Any questions, feel free to give our support department a call. Have a great weekend, everybody.